Hello and welcome to Pro Trader Strategies Market Commentary for Monday, the June 8th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic and geopolitical environments and how that impacts the overall markets with my market analysis. I do the same thing in these daily market commentaries, but I try and layer on some option strategies that I find based on that economic, geopolitical, and market analysis. So without further ado, let's get on with the economic data across the pond. Not really a whole lot to see. It is a Monday, so there's not really going to be a whole lot of economic data usually on Mondays. One thing to note, though, we do have a two-day meeting this week for the FOMC. That's going to determine the interest rates, right? That really across the board, it starts out with the overnight lending rate that the banks use. That's Fed funds. And then that expand, everything else is kind of built on that. So we'll see what happens there. They're probably not going to do anything here. They're going to talk about low inflation and maybe keeping interest rates a little bit lower in order to spur on some spending. Right, that's the idea. You keep interest rates low. That keeps people thinking, hey, you know what? I shouldn't save if I'm not making any money on an interest rate. Something to talk about with the oil that's going on. We're seeing oil come off by about $1.35. Looked like we were going to cover the gap. Just came up slightly shy of that. Started piercing into the 40s, but as you can see, the low here in this oil was 41.05, and then we got that gap down. The high here today is just slightly inside of 40, so we missed it by a few dollars. It's not covered as far as I'm concerned, but one thing we're going to see here is probably some continued strength here. Remember OPEC, we talked about this a while back, where they were cutting back on production, and about 9.5 million barrels per day was the production cut out of OPEC to try and get some of this supply off the market, limit the excess supply, and wait for some of that demand to start increasing. Well, we've seen the demand start to increase, right? We've seen some of those oil reserves come off a little bit. And another thing that this 9.5 million barrels was supposed to come off here in June, where they were going to go back to their normal production levels. Well, they met over the weekend and decided to extend that reduction per day going forward. A couple of companies that aren't really in OPEC, but had started limiting some of their production was like Mexico, Libya. They started pulling back on some of their production. Here in the United States, they just pulled back on production because they couldn't make any money. Well, now that we're back up into that 40, we're starting to see some of those U.S. oil producers start to pick back up and produce some more oil there as well. So that being all the levers and pulleys going on, the U.S. Starting to ramp up is not going to make up for the 9 million barrel deficit that we're going to be seeing out of OPEC. So we could continue to see some of these oil reserves start to dwindle a little bit, and that should drive some pricing higher here in crude oil. All right, sorry. Moving on to gold futures. They're making a bit of a move after yesterday's big sell-off into the 1600 handle. I'm not too worried about it being below or above 1700. You know, my lines in the sand are that 1658, which I've talked about, and the 1787. I think we're going to continue to see this market want to kind of trade back and forth in between those two levels there that line up with my Fibonacci right here. You know, I think we're going to kind of stay within these two areas, build up some volume here in and around that area, right in here, kind of build up some volume. We're not really seeing a lot of pricing trade or trading happen there. We're seeing it really get complacent there, though. So that seems to me to be about where it's going to be. It could get some moves based on the FOMC on Wednesday. So it's a two-day meeting. We won't hear anything on Tuesday, but they will come out around 1 o'clock Central Time and 2 o'clock Eastern to give us their final statement on that. All right, Jerome Powell will be talking. Sorry, I had a brain blank out there. All right, bonds are moving higher today. I was expecting us to stay in a little bit tighter of a range. We did get a little bit overextended to the downside as far as I'm concerned, because I don't see interest rates really ramping up. Yes, we got that great unemployment number on Friday. That really got the markets moving higher, right? Well, over the weekend, there's been some question marks coming out in and around that, the way that they came up with some of those economic or those data points. Gosh, I feel like I have marbles in my mouth today. They are talking about how it is very difficult to compile what these unemployment numbers are. Some of them, some people are saying that the PPP program allowed some businesses to keep people employed there, and that could be making some of these numbers look a little bit funky. But the fact of the matter is it is what it is. I don't think that the economy is going to be firing on all cylinders relatively quickly. Yes, the equities are really moving higher. Nasdaq, I think, even had a new all-time high again today. But that being said, interest rates I don't think are going to go anywhere anytime soon, and I think we'll see that coming out of the FOMC on Wednesday, that they aren't really moving interest rates or thinking to move interest rates right now. VIX moving just a little bit higher today, and it's one of those days where we're seeing the VIX move higher with the equities moving higher. Is that due to people putting on buying puts out there to try and protect some of these gains that they've got going on, or are they rushing out to buy some calls because of the market moving? I think it's probably a little bit of both, to be quite honest. I think people that got in on this check mark recovery, we were talking about a V-shaped recovery. Well, with the market being as high as it was in February in a lot of regards, that is probably causing a little bit of angst on both sides. The people feeling like they missed out, need to take advantage of some more upside, and the people that got in early are starting to wonder whether or not they need to pair off some of those gains and or buy some puts to protect those gains going forward. Here we go with the Nasdaq. There you have your all-time high there at 98.75.5. So that is a new high and continuing to just move lockstep in this check mark recovery. That's what I'm talking about, the check mark recovery being higher than we were, before all this started, which is just crazy at this point with businesses not being able to open yet with the protests and everything else. That's just going to exacerbate the problem with some of these small businesses. All right, E-mini S&Ps up into the 3,200 handle today, trying to test Friday's high. Friday we had that big rally, and today starting to continue laying on top of that. It looks like some of that stuff coming out about the non-farm payroll number being a little bit wanky over the weekend isn't affecting anybody's bullish sentiment here. Does not seem like there's a whole lot of sellers in this market. I don't know if they're kind of sitting on their hands and holding on to some short positions. We haven't had like a blast off capitulation moment for everybody that was a bear during this, I don't believe. They had a couple of opportunities to cover, but it just doesn't feel like they have. So this could be adding to this momentum to the upside, as well as we have a lot of newer investors coming in as we're starting to see Robinhood, TD Ameritrade really talk about money inflows into assets under management, which means those new time account builders are usually out there buying long. They are usually biased to the buy side, and I think that that's helping aid this move to the upside as well. All right, E-mini S&Ps, pretty quiet day. Almost feels like an inside day, despite the fact that the value area is slightly higher than we saw on Friday at this point. But the market just really trending sideways. Overnight inventory was pretty flat. Even today, I would say that the inventory is relatively flat. Just seems like volumes are really dying off. Thor, I wanted to talk about because now it's all the news, you guys. We were talking about this when it was down at around 35, before anybody really started moving on, getting a hold of this company. They are the travel trailers. Something interesting. I heard, which I hadn't really even thought about. But what I was talking about is people aren't going to want to go to an Airbnb. They might not want to get on an airplane, but they're going to go out there and buy these travel trailers. I was even talking about during this rally how basically people were flipping travel trailers. A friend of mine had a 10-year-old travel trailer. They sold it for more than what they bought it for. They bought a used one, but they've had it for like 10 years, and they were able to sell it for more than what they bought it for, which is just absolutely crazy. Now they went out and bought their new travel trailer, which is a little bit more of, as they have a growing family, they wanted to get a bigger travel trailer. But people are going out there and knocking it out of the park. They do have earnings coming out, so I think that they're going to see those earnings do very well. The market is well ahead of that. But something that I saw that was a bit of a surprise here, and I hadn't really thought about it, is people are buying these travel trailers as their home office. So they're buying a travel trailer rather than having an office somewhere, because if they can work from home and they have this office space, they can travel around and go anywhere they really want, which is one of those things that I started out when I started trading from home, is that, you know, I could trade from a mountaintop, or I can go anywhere I want as long as I've got my laptop, and I do bring a side screen so I can expand that. But if I can go wherever there is Wi-Fi or there's internet access and trade from wherever, makes it a little bit more difficult with the kids. But, you know, the fact of the matter is that is perceivable or plausible thing to do, and that's what we're starting to see is people are saying, hey, you know what, if I'm paying rent for this office that I don't really need to be in, why not just get that money and spend it towards a travel trailer, and I can go and do my work from anywhere. So interesting take on something that I hadn't thought about with these guys, but that's what we're starting to see with that. I don't have a position in Thor, but I was just astounded the fact that this market is just blowing off the top. As a matter of fact, with this Thor trade, I covered it a while ago at closer to the 80s. I think I actually covered it on basically when we started seeing this topping. It blew off a couple of times, and I covered it probably a little bit early. I was happy with my gains though in that trade, so I'm not really looking back. I just saw today that wow, it just blew to $100, which is really moving. Boeing, they are the leader of even the airlines right now. They are moving higher as people are expected to start traveling and moving forward. Something to note with Mastercard, I do still have a trade on with this one. I have covered calls on it right around that 300 level. So yes, those look like they are going to be called away from me. I'd be happy with that, to be quite honest. But they did see some American Express get downgraded today, so that's hurting Mastercard right now. So those are all the things that I've seen going on. I haven't added or taken anything off on my position. I was thinking about covering some of my American airline covered calls, because those with a bit of a pullback as of Friday covered that gap. Remember, we gapped up. That's when I sold those calls there at the 30 handle. I'd be happy to get called away from me at 30 for sure. You know, they are pretty heavy debt ridden, probably more so than any of the other airlines. So I'd be happy to be called away, but I also can't really sit by and watch it when I'm seeing my calls go down in value as much as they are. As a matter of fact, I think I got into those covered calls at around 90 cents. I sold the June 30 calls that expire in 11 days for 90 cents. Right now they're trading for 28. So it starts going below that 28 and start seeing more of a pullback here. I will likely cover those calls and then wait for a pop and start selling those maybe in the July. Start trying to sell some calls in the July. So that's about all I've got going on. Just keeping an eye on my position. I'm pretty happy with it across the board. The longs are doing pretty good, and anything as a covered call is, you know, already taken care of. So that's all I've got. Check out the webinar. We're doing a new course here. It is the roadmap to building option strategies and how to set those up. So check those out at protraderstrategies.com. It's a completely new setup, a different mindset as how we're approaching this. So that's all I got for you, other than we got to go over one other thing really quick. So please take a moment of your time to check out our disclaimer. Keep in mind we're an educational company and there is the possibility you could lose your money trading. All right, so read over this, and if you can't take that, take it easy.